Good afternoon, everyone. It's just after the American Open, and I want to have a look at a share that I'm currently a shareholder of called Games Workshop. And it's a share that's featured on VectorVest over the last 6 months. I'm looking at the stock viewer on VectorVest, which rates all of the stocks on the London stock market by our proprietary indicator VST, Value, Safety and Trend. If I just, in fact, find Games Workshop and isolate it so it's easier to see. So Games Workshop, folks, trading at £24 yesterday. We believe it's worth 29. And VectorVest values every share in the market every single evening, and as a default we favour undervalued shares, up 40 pence on the day. Our second proprietary measure is relative value, and relative value measures the price upside in relation to a AAA rated corporate bond over a window of 3 years into the future. And at 1.67, we believe that this share is going to outperform the performance of a AAA rated corporate bond by 67% over a window of 3 years into the future. Anything above 1.3 we rate as excellence. That's a really good number. Relative safety measures the safety and the predictability of the earnings on a scale between 0 and 2. Anything above 1.3 is excellent, and 1.47 means that this is a company that's making money and all those financial ratios are getting better. So 3 really good numbers. I've found a share that's undervalued, that the share price should perform very strongly over the next a window of 3 years into the future, and in the past the share has performed perfectly. So what I've done is that I've analysed that share fundamentally in a few seconds. RT measures the trend, relative timing, on a scale between 0 and 2. Anything above 1 means it's rising. And when we put those 3 numbers together, value, safety and trend, then the master indicator VST is sitting at 1.43, which I think is the 4th highest in the entire London database. VectorVest puts every share in the market and assigns a buy, sell or a hold to each share in the market, and Games Workshop is on a buy recommendation, and we've calculated a stop at £21. We believe it's going to grow earnings next year at 34%, which is quite a clip. Lots and lots of other information here as well, but let's move on to the chart. And if I pull up the chart, we've got the chart in my normal layout, folks. Above the price, the green line is the VectorVest valuation, and in the blue line study in the window below the price is earnings per share. And as you can see, the earnings per share is pretty much doubled over the last year. And that's the engine that's driven the share price up the page. I've been involved in the share since about here, about £13. See that little gap? Okay, added to the position just here, and I'm considering adding to the position again just here. Okay, as you can see, it's broken out this little triangular formation, but the really important thing is that it's on a buy recommendation. Just remember, folks, although this share may be suitable for me, it may not be suitable for you. But I just wanted to show you how you can actually analyze a share's performance fundamentally and technically in a few minutes. Thank you very much for listening. Bye-bye.